I'm joined by Frederic Neumann, who's a senior economist at HSBC. Thanks very much for speaking to us. So, first of all, what do you think we'll learn from Bernanke's testimony? Will there be anything new?
I think it will lay out a gradual tightening path. I think this idea that we get a very quick, rapid succession of tightening moves is a bit overdone. The U.S. economy, as we saw with the consumer confidence data yesterday, still has a long way to go to fully recover. We know that price pressures are absent in the U.S. Unemployment is very high. And after all, the Federal Reserve needs to bring down unemployment before it can credibly raise interest rates. And therefore, I think he will not rush into things. He will just lay out some gradual steps over time.
And so how do you reconcile the possibility of him laying out a timetable for tightening monetary policy with comments that we've been hearing from the president of the Fed Bank of San Francisco, Janet Yellen, we were just hearing there, saying that this is not the time to be tightening monetary policy?
Well, the market wants to know what steps eventually the Fed will take. There's a lot of uncertainty because we saw unorthodox measures being applied. And so the market has to have a game plan, so to speak, of what the exit strategy will look like. But it doesn't mean, as the former voting member Yellen said, that we'll see imminent tightening. I don't think we will see imminent tightening. He will just lay out the game plan, so to speak.
So with that in mind, then, how do you think he will explain last week's decision to raise the discount rate charged to banks for making direct loans? Because that caught the markets by surprise.
It did catch the markets by surprise, but I think it was a very technical move, and perhaps the market overreacted. The Fed needs to make sure that people don't take discount window loans without really there being any need for it. So we have to raise a penalty rate, if you will. It's a technical move, but remember, the Fed is still buying mortgage-backed securities, for example, so it's actually still supporting the economy to a large extent, despite the hike in the discount rate.
So you don't think that a hike in the discount rate will necessarily pave the way for a rise in the benchmark interest rate?
Eventually it will, and people say, well, this signaled it. But I think it's probably 18 months away, or 12 to 18 months away, before we see real tightening of monetary policy in the U.S., because the U.S. economy has a long way to go to fully recover.
Now, U.S. stocks have slipped out of this testimony. Do you think that we will see any rebound?
I think the financial markets always, when it comes to the first tightening moves after aggressive easing, always are a bit volatile, and that's probably what we're seeing now in the U.S. economy. But once it becomes clear what the game plan is, once it becomes clear that the Fed will not move too aggressively, I think we'll get a gradual recovery in markets and afterwards.
It's interesting, latest figures coming out of the U.S. are not particularly positive. As we saw yesterday, U.S. consumer confidence has fallen to something like a 9 or 10-month low. As you say, unemployment is still a big issue. What else can Bernanke do? What can the Fed do, given that interest rates are zero?
There's not really much they can do at this point. There was some speculation, I think, late last year the Fed may again step in to purchase mortgage-backed security once the current program runs out in the second half of the year. I don't think that's likely at this stage. The prime driver would be monetary, fiscal policy, and we saw a jobs bill come through on Capitol Hill. It's a bit perhaps disappointing in scale, but it's really fiscal policy that's the main driver now, not monetary policy. The Fed has done enough for the time being. And
how effective has their policy of their actions been?
The monetary policy actions, I think, have been very effective, and I'm a bit puzzled as to why the Fed gets so much criticism, because remember in the fall of 2008, the world stood in an abyss. We saw global financial markets seize up, and the aggressive action by monetary officials really helped to steady the ship.
But then, you know, let me ask you about comments by former Fed Chairman Alan Greenspan, who has said that the recovery is actually extremely unbalanced.
It is unbalanced because it's led by fiscal policy currently, but that's just the nature of a massive contraction that we've seen. It's the biggest recession since the Second World War, and so the recovery will be uneven.
Frederic Neumann, thanks very much.